Hey, good morning, guys. Welcome to live trading session today. Watching our top tickers here, looking for a potential trade, good setup, any breaking news. Here we go.
Thanks, Oliver. Appreciate you being here this morning. LeanMai.com. All right, love the analysis down to the stock level with a couple picks there that have been unappreciated. And a look, too, at the number of companies making highs going down as the stock market's going up. All right, NVIDIA's market, we're living in it. Well, when we talk stocks this morning, we do have a little earnings on our mind. Russell right now is under some pressure, but we've got some firming literally in the last couple minutes there for the rest of the futures. We got the NASDAQ up out in front. We got the bond market firming a tad since I walked in the studio half an hour ago. So the 10 years coming in at about 4.3 right now, and the dollar is perfectly unchanged after the ECB cuts rates, following the Bank of Canada cutting rates. Hard not to think that investors think the Fed's thinking about cutting rates too. So even though we've got a massive move happening around NVIDIA these last few sessions, hundreds of billions, trillions when you stretch it out past a week, just assuming the market cap of other behemoth businesses, global businesses, it's extraordinary. You also have to think that investors are pondering what might be possible from the Fed, seeing their central bank peers easing up policy. So that's your context. But the economic data over the last 48 hours here, between ISM services rebounding above 50 yesterday, and generally jobless claims coming in pretty consistently, a little bit of a creep higher, but overall data that have been fairly reliable suggests the Fed is going to need to see more before making any big decisions. So tomorrow's employment situation definitely becomes a big deal, but right now there's a good bit of calm across the macro assets, with 10 years, dollar, and Bitcoin all little changed. Crude oil, same story there, kind of settling into a mid-70s range now after failing to break out above 80, reversing hard, but then also finding a little support above 70 bucks too. So when we look at stocks, we've got Lulu after earnings trying to rebound a little bit. Got some analyst commentary and a few other reports from the last overnight and morning session, as you continue to see some of the Chinese EV makers with volatility. NIO down 7%. Also 5 below post earnings, just getting blasted right now. Dollar Tree dropping in sympathy alongside some negative analyst commentary. Let's start with Lulu, which has been falling off dramatically this year, but finding some buyers. And it didn't seem like the numbers were terrific, Renita, yesterday, but it didn't seem terrible either.
You're right. The theme of this quarter for Lululemon really is better than feared, because many of its numbers were just narrowly beating estimates. But the company did manage to beat estimates nevertheless, even though it did give some weak guidance for the second quarter. But let's look at the numbers. Adjusted earnings came in at $2.54 a share, and revenue grew more than 10% to $2.21 billion, and comp sales were up 6%. However, growth in the Americas is starting to stall. It was flat, but international growth boomed 25%. And of course, the company touted that. Now, the company is also adding $1 billion to its stock buyback program. That shows some form of success as well. And during the quarter, the CEO said that Lululemon actually fumbled because it did not have the right sizes and colors in the stores for its customers that they were actually demanding, and that hit sales in a big way, especially in the U.S. But the company is still expecting a little bit more of a slowdown in the Americas, which is its largest market. So looking ahead to the second quarter, they're expecting revenue in the range of $2.4 billion to $2.42 billion. billion. That comes just below the estimate of 2.45 billion. And then they're seeing adjusted earnings at $2.97 at the high end, just below the estimate of $3.01. And of course, we have some mixed reviews coming from analysts this morning, with HSBC upgrading Lululemon to a buy from a hold and raising the price target. Barclays, however, cut its price target to $338 from $395, kept it at an equal weight rating. Wells Fargo cut the price target to $350 from $425. Bank of America raising the price target to $440 from $430. Very mixed reviews. Bank of America was the one that called it better than feared. TD Cowen raising its price target to $447. There's a high price target in the 500s, but we'll find out if that will stay where it is today.
Such a different world we're in when folks are framing it as better than feared. You know, to have fear around Lululemon, which was so reliable for so long, just really speaks to how the America's part has slowed down.
It does, and you see it in the chart. I mean, this stock is still trading near its 52-week lows, which it just hit not too long ago. And they still say, though, that this is best in class. But something interesting that I read as well about this is that Lululemon may lose a little bit to the trends, because right now it's a huge trend of denim. People are not walking around in yoga pants anymore. They want to walk around in denim. I'm a part of that. I'm walking around in a lot of denim these days. So unless Lululemon wants to create some denim, they might lose.
Yeah, okay, well, they got to switch it up a little bit.
They do. You have to keep up with the trends.
Yeah, okay. So look, not